You know that little voice in your head that lights up when you see a 5,000 rupee annual premium for health insurance? It goes, wow, that's super cheap. And then the brain stops asking questions because who doesn't want a cheap health insurance plan? But here's the thing. We've spent years studying how these so-called budget plans actually behave when people make claims, and it's never a pretty picture. Hi folks, I'm Shashank and you're watching Ditto Insurance. In this video, we're breaking down a very important question: why the cheapest health insurance plans in the market might actually cost you the most. We'll explain what corners are being cut, why that 5,000 rupee premium could leave you with a 1 lakh rupee hospital bill, and how to actually find value for money plans that don't backfire. And if you're feeling overwhelmed with all of this, you can always skip this and book a free call with our advisors. We're backed by Zerodha, rated 4.9/5 on Google by over 14,000 happy users. We never spam you, we never upsell, we just give you honest advice that actually will help you. Alright, now let's dig in. So, what do we mean when we say a cheap plan cuts corners? We'll start with the basics. A low premium always comes with a cost, and that is the lower coverage. You'll see room rental limits, disease-wise caps, co-payments, and a complete absence of features that actually matter during hospitalization. Now, to understand this, let's take a simple example. Say you bought a 5 lakh rupee cover for 5,000 rupees per year. Seems decent, right? But the fine print says room rent limit 1% of sum insured. That means you can only stay in a 5,000 rupee per day room. Now, if you land in a 10,000 rupees per day private room, your total hospital bill gets slashed by 50% because insurance companies apply proportionate deduction. So even if your total bill is 2 lakh rupees, they'll pay only 1 lakh rupees. That's right, you paid for insurance, but your claim still left you broke. And it's not just room rent. These cheap policies sneak in disease-wise sublimits. Now, you'll see things like 40,000 rupees cap on cataract, 1 lakh rupees on hernia, and so on. They'll also exclude or cap modern procedures like robotic surgeries, laser treatments, and more. This means that you won't get coverage for the best available treatments, and you'll end up paying out of pocket. Now, add in copay clauses as well. Most of these low-cost plans force you to pay 10 to 20% of every bill, especially if you're over 60. So, on a 2 lakh rupee bill, you're automatically paying 20 to 40,000 rupees out of pocket, no matter how loyal you've been to the policy. And then comes the silent killer: no restoration, no bonuses, and no preventive checkups. So the minute you use your coverage, that's it. You're on your own for the rest of the policy year. You might be wondering, okay, fine, they trim some features, but I'm young and healthy, so it doesn't matter much. Now, what's the worst that could happen? Well, the worst is you pick a cheap 5 lakh rupee plan and 3 years later you're diagnosed with a critical illness and now you want to upgrade. But your insurer says, sorry, we can't increase the sum insured anymore. And that's right, they can say that because once your medical history changes, your upgrade options kind of vanish. You're locked into a weak plan when you need protection the most. Now, that's why we always say start with the right cover right now, even if it costs a little more. At Ditto, we usually recommend at least 15 lakh rupees if you're living in a metro city. Depending on your budget and family size, you can go higher. But 15 lakhs is the minimum we're comfortable with because 5 lakh rupees doesn't go very far anymore. Alright, let's talk about some hidden traps that people often fall for. Many budget plans offer you discounts if you agree to pay a voluntary copay or accept deductibles. Now, sure, you save 1,000, 2,000 rupees in premium, but that saving comes at a huge cost. Now, during an actual claim, you end up paying lakhs more. Same goes for plans with preferred provider networks. You only get cashless treatments at a handful of hospitals. Step outside of that list and boom, your copay kicks in or you're forced into reimbursement, which defeats the whole purpose of getting an insurance in the first place. Now let's talk about insurers who offer suspiciously low premiums. These are often new entrants or players who are trying to grow fast, and they do that by undercutting the market. But if their claim settlement ratio is weak or their solvency margin is low, you're taking a massive risk. Because when things go wrong, they may delay, dispute, or even deny claims. For reference, a good CSR is anything above 95%, an ideal solvency margin is above 1.5 times, and you also want to look at their incurred claim ratio. Now, if it's too low, they might be rejecting a lot of claims. If it's too high, say above 90%, they may not be sustainable in the long run. So what should you do instead? You go for value for money plans. These are not the cheapest, but they offer strong coverage with no hidden traps and come from reliable insurers as well. A few examples that we like at Ditto are Aditya Birla Active One Max. Has 0 room net restrictions, unlimited restoration, 500% bonus and wellness benefits. Premiums start around 9,500 rupees for 25-year-olds. Care Supreme is slightly little more expensive but a very clean plan. It offers 180-day post-hospitalization, unlimited restore and good digital claim support. There's one more, Niva Bupa Reassure 2.0, especially the Titanium Plus, which is their highest variant. You actually get 10x booster coverage, unlimited restoration and a well-rated service team. Across all age groups and coverage amounts, Active on Max consistently comes out as the most affordable among these three, while still offering the full feature set. To give you a sense of numbers, for a 30-year-old couple with a 5-year-old child, 15 lakh cover, Aditya Birla Active on Max comes in at around 25,500 rupees, Care Supreme at again 25,200 rupees, and Niva Bupa Reassure 2.0 Titanium Plus at 30,000 rupees. Now, the gap isn't huge, but the value you get for the price, that's where the real difference lies. So remember this, cheap is not the same as value. A 5,000 rupee plan that leaves you with 1 lakh rupee hospital bill is not cheap, my friend. It's expensive in disguise. A 15,000 rupee plan that pays your claims in full, offers wellness tools and helps you stay healthy, that's value. Now, if you want to cut through this noise and just find the best plan for your family, reach out to us at Ditto. We don't push products, we don't spam, and we just give you honest, research-backed recommendations so you never feel misled. Book your free one-on-one consultation today using the link in the description. And folks, I will see you in the next video. Until then, happy insurance hunting.